Hello, this is Manesh Patel with IMTF Trade. Today is December 24, 2018. I am here today talking to you about the markets, and basically the reason why I was recording this one day before Christmas is that a lot of people are panicking due to exactly what's happened in October, and they're thinking everything that happened in 2007 and 2008 can possibly occur again. So what I want to do is I want to show what's happened in the past in 2000 and also 2008, and then kind of look at exactly what's going on today in the market. Now we're going to look at the S&P 500. Reason why, that's basically the market that basically has majority of the stocks in there. It represents the financials, which were pretty much a lot of key things that happen. Right now on this chart right now, this is the SPX, and I'm showing you 3 months, which is quarterly. I want you to note one thing. Look at this red bar, this quarter. This is the last quarter of basically this year. Notice how big that red bar is. Do you ever see a big red bar that big at all? You have not. So what we're going through is something unique, and that has not happened at all. In fact, if you count the number of bars backwards, it basically we're coming back here to this level here. Last time we were here was basically a 2017 beginning. So the price action that's occurred this quarter in the last 3 months has wiped out the profits for the last 2 years. Okay, that means all of 2017 and 2018, all the profits have been gone, all in 1 quarter. This is incredible. Should you be worried? Yes. Should you be panicking? No. There's no use to be panicking at all. You got to sit there and understand how these markets work and sit there and be able to navigate through them, and that's what we're going to show you how to do. Okay, so let me go sit there and let's go down to the details, and let's go to the weekly time frame. Okay. And what I'm going to do is I'm going to go back to 2000, because that was my kryptonite. That's basically when I lost a lot of money. Okay, and I graduated in '96 as an engineer, and then pretty much came into the markets, rode the internet bubble boom going up, and then took it all the way going down, going bankrupt, and so forth. Okay, so I kind of want to show you that. Actually, you know what? Let's come back here. It's way back here. Okay, now what we're going to do is we're going to keep things simple. Okay, when price is above this cloud here, that means we're basically bullish. If price was in the cloud like in here, that means we're consolidating, word of caution. If price is below the cloud, you should not be in any bullish positions at all. Now, why does that matter, and how does it work whether you're a long-term trader, whether you're a short-term trader like swing, day trading, and so forth, or if you're just here for retirement accounts? Everyone should be at least looking at this for your retirement accounts. Yes, you can't sit there and dictate what to buy and sell in your retirement accounts, but you can sit there and go to them and say, hey, I want to go cash. And then when you feel like when the market's bottom, sit there and go and say, hey, go ahead and turn it on, and you could do whatever you want at that point because you're buying everything at a bargain. And that's kind of how we've done my family retirement accounts and so forth. And believe it or not, you stop the drawdown and so forth, everything going. Okay. Now, notice one thing. When I graduated in '96, we're above this cloud here. We stayed above the cloud, above the cloud, above the cloud. And then finally here, which was basically of October 2000, basically we closed below the cloud here, and we kind of consolidated, and we followed through and kept on going down. So basically, when we got in the cloud, you could sit there and make sure you don't have any more bullish positions, but you definitely need to get out of all your bullish positions here at this point right there, which was October 2000. Okay, and at that point, you get out of your positions, whether it be retirement, day trading, swing, whatever, it doesn't matter. If you're bullish only, get out and just go in cash and sit there. Okay, so imagine from the long-term perspective, retirement accounts, you tell them, hey, let me just go cash. Then you just sit there and you wait, and then you wait for a price to get back above the cloud, which was here, June 2003. Then you say, hey, go ahead and turn my retirement account on, and now they turn it on, and you stay in this market until we close below the cloud. Okay, we close below the cloud here, which is basically January 2008. At that point, you go cash, you stay cash in your retirement account, and then basically back here, this is the first time it closed above the cloud was September 2009. You go back in here, and you go back, and you basically turn them on, and then you could sit there, go cash again here, then you go back and turn it back on here. Okay, and look what happened. At that point, you rode this all the way up, and then you had a little bleep here where you have to go cash again, then you come back again here, go cash, and then come back here, go cash. There's a couple of times in here you have the little bleeps here, and I'll talk about those bleeps in just a moment and why they never followed through. So you could even avoid these bleeps yourself, because I'm going to show you exactly what happened in those moments. Okay, and then you could see here, once it went back above the cloud here, this thing is ridden up, and then over here, 3 weeks ago, December 10th, we actually closed below the cloud, which is major, major, major. A lot of people did not realize that at all. And at that point, you should have sat there and, believe it or not, gone cash in your retirement account. Because now, look what's happening here. You've had a move here, and you could see exactly what big of a move that we've gone down from here to here. We just now began. This is a 10% correction from when we closed 3 weeks ago below this cloud here, which is a sign of caution. Okay, we've been talking about this for years and years and years. We've been doing a lot of webinars for a lot of people and trying to help them out and stop the bleed, at least in their retirement accounts. And hopefully people are listening, but I doubt if a lot of people are. Now let's address these little bleeps here. This is a weekly time frame. The only thing that could override the weekly time frame is monthly. Why did these not follow through here? Bearish right there, and there was also one here right there. Okay, and I'm going to sit there and just draw a vertical line, and I'm going to quickly show you why it never followed through. So here is a monthly time frame, and on the monthly, most critical thing is that when you sit there and you go down below the cloud on the weekly, if in order for it to follow through and keep on going down, you have to break this green line and close below the green line. Notice one thing. This point right here, we never closed below the green line. Over here, we never closed below the green line. That's why they never followed through. Over here, we sat there close below the green line, but you had the top of the cloud here, which stopped it right there. That was a problem. That's why we never followed through. So we never followed through until we closed below the green line. Look here, in 2008, when basically the financial crash happened, look what happened. We closed below the green line here and we followed through, and then we went below the cloud on monthly too, which is even more dangerous. Okay, and that's what we're looking at now. We have, if the month is not over, but right now you got about a week and a little, this end of this week and next week for the month, and it looks like we're going to close below that green line. Okay, that's a word of caution. We can't sit there and pull back to that green line right there, which is 25.21, which would be a major, major resistance there. But at that point, we now have a high probability to get to the top of this cloud here as long as we hold this resistance here. And believe it or not, that means we could sit there and go through another 6 to 10% correction to the downside even more, whether it be from this point here, or we could go up and then we could sit there and start going towards this cloud. As long as this resistance here at 25.14.12 holds on a monthly time frame, we are in a danger zone where we're going to go for some major corrections. So it's a word of caution for everyone out there, including your retirement accounts. Okay, so I would sit there and be very, very careful on what's going on here. Notice what happened here. Even though we closed below here, we went down here, we had the drawdown going down, we pulled back to that green line, held that green line right there, and then we went down. It did not sit there and close up and retest the high. If it did, the financial crash never would have occurred. And that's the critical thing we're looking at now to see. Are we going to come back to that green line, hold it, and then come down, or so forth? So we're looking for this drawdown to finish, and at that point, we're looking for it to pull back up here, maybe Q1 of next year, Q2 of next year, and so forth. And then at that point, that's going to be critical to see exactly what happens to go into this market going down. Next year is very, very critical, and I'll be very cautious for everyone, or for day trading, swing trading, and long term, and so forth, because this market is doing something that you've never seen. And you could see from a quarterly basis, a lot of these institutions, retirement accounts, and so forth have declared 2018, most of them are pretty much going to show you negative returns now for this entire year. And in fact, if you look at it, the quarterly, if they just stayed in their long-term positions and didn't rotate sectors, then they're going to sit there and show you that this year you basically wiped out this year's profits, which you had when we started making all-time highs, and also last year's too. And that's very dangerous right now, which is going on. Okay, so how do you avoid this? One of the things that we did was we came out with a course. Okay, And if you go to our website, imtftrade.com, go to education, go to training courses, and I'm up front right now. Okay, this course is $600. It's a one-time fee. It's $600. However, that $600 is peanuts compared to thousands of dollars you're going to save and so forth. If you don't remember 2007 or 2008, go look at your retirement statement there and look how much you lost. $600 to save exactly what happened into you in 2007 and 2008 is very minor, and that's basically what you're looking at. Okay, what does this $600 include? It basically includes, this course is 3 months. Not 1 month, not 2 months, but 3 months. What happens is you meet every week with me, live webinar for the first month. So we're going to have 4 weeks solid of training. Okay. Then you're going to have every bi-week for 2 months. We're going to do follow-ups. We're going to talk about your losing trades. We're going to talk about your winning trades. We're going to talk the markets, everything for the next 2 weeks, every other week for 2 months, which is pretty much follow-up for that 1 month. Okay. One of the things we're also doing is because of everything that's occurred, we're basically making you a no risk offer. What does that mean? That means you could sit there and sign up for this course right now. Okay. And this is only valid until the seats are full. We have limited seats. I'm warning everyone now. Okay. You could sign up for this course right now, and basically you could attend the first session for free. If you don't like everything, you don't believe in anything at all that we're doing, then within 24 hours of the first session, you can email us or call us up and say, hey, I want to cancel. And at that point, we'll give you your money back for this entire course. So it's a no risk offer at all. This is the first time we're doing this, and it's going to be the last time we're doing this. And the only reason why is due to everything that's happened. A lot of people are hurting and so forth. And we want to sit there and help people out and get them going on the right course. I know a lot of people are mentally distraught right now on looking at their statements and so forth, but you need to stop getting emotional, and you need to figure out how these markets work and how to navigate them through it so that you do not lose any more and you have the ability to start recovering everything that you lost. So again, this is a no risk offer. All you do is sign up, okay? And then you could attend the first session for free, and then you have 24 hours after that first session if you don't like what you hear to cancel. In that first session, we're going to go for everything. In fact, I'm going to teach you how to do breakout trades, which everyone avoids successfully. I'm going to show you how to forecast. What do I mean by forecast? Most people wait for things to happen. We don't. We're going to look at things and we're going to say, before the trade even enters, we're going to look at probabilities and say, this has a high probability of getting a 3-to-1 reward risk ratio. It does not. This is something you have to see. No one does forecasting on breakout trades at all. We do. And that's one of the reasons why we sit there and we talk about getting 3-to-1 reward risk ratio on our trades, because we have the ability to forecast. We don't wait for things to happen and we lose some of the reward at all. So if you've been bleeding, or you want to sit there and start changing the way you trade, or you're not successfully trading, I would take my offer up on this no risk offer right away while limited seats are there. Okay, so we have limited seats, and this is the first time we're doing this because we've never sat there and did what we call a no risk offer on our foundation course at all. Everyone that's taken our foundation course has loved it, and there's been never complaints at all. In fact, it's changed a lot of people's trading careers just in the first week that we do the breakout trades and so forth. So this is your way now to sit there and stop the bleed, at least in your retirement account, if anything. And I would encourage everyone to sit there and sign up for it. It's a no risk offer. There's no issues at all in getting your money back as long as it's 24 hours after you sign up. Okay. If you have any questions, you could email us at info@eiicapital.com, or you could give us a call here, which is the phone number right there. Okay. I hope everyone has a happy Christmas, and hopefully you don't get distressed and everything and what's going on in the markets and so forth. Enjoy your time with your family, and don't worry about everything. Sign up for that course, and basically we will show you how to navigate for these markets and avoid the bleed that keeps on coming, and that will be coming into 2019. Thank you.